Hello friends, thank you so much for watching another video of mine. मैं हूँ SD Shanando Das, multi-asset trading and investment specialist. In this video, I'm going to discuss about, as the title says, the global equity market. And global equity market, I'm going to discuss in context of the three major risks that I've highlighted for this recessionary cycle. As per historical structure, we are into recessionary cycle. Whenever the US interest rates curve has become inverted, we have seen a recession followed up. I don't think we are exactly at that tipping moment of that ultimate high, but it's very difficult to gauge at this point. So whenever we are seeing the risk on the higher side, we are overall remaining on the short side of the market, and obviously few stocks anyway would like to go up. So we're looking and finding those kind of stocks and overall keeping a bearish picture or remaining out of the market. So currently, if I have shown you throughout the day today that the risk master, even in the daily chart, they are much on the higher side, and it has been showing that full red colored. So it is not a great time to remain invested on the long side of the stocks. A lot of breakouts, you'll be seeing failures, a lot of stop loss hitting must be happening. So in this context, which are the main risk themes that I'm focusing on? One of the major risk theme to me has been China. The weakness in China in the property market, if the debt bubble over there blows out of proportion, that can impact the overall global markets as well as additional pressure on emerging market currencies. So, want to stop that, what we saw, the Chinese government provided stimulus to the economy. And I've been saying now the overall risk of Chinese on China has gone down, but now the focus will be whether the stimulus is becoming successful or not. After the initial bull rally, let's have quite a quick look via HD Rainbow Asset Master and HD RSI X. You can see there has been a sharp down move in China, suggesting that we should move out of our long position as the background turns yellow. Now I'll place a price action bullish. Let me remove the replay for replay time. So I'll be able to place the right alerts. Right alerts right now is the minimum is the price action bullish. That's a full green candle. Short-term momentum, it has been a very sharp fall in China. Now, this is what I've been warning about. Now we have to see what happens to the rally after the initial move. If the rally fails to sustain, we can't yet say that it is failing to sustain. But if it fails to sustain, then the focus will once again of market will turn towards China, that China could be the one that is becoming weaker and weaker. So this is definitely one factor. Another factor is global geopolitics regarding war, and we have already seen a tempo on the higher side on this war front. And Israel and Iran, they are exchanging ballistic missiles. Hamas involved, they were attacked on the last anniversary from where it started, the terrorist attack on Israel by Hamas. So that's again heating up. Overall, Middle East remains heated. So that risk has gone up too. China risk has come down. Middle East risk has gone up. That is the risk of war creating the trigger for recession. That has gone up. But also now we'll have to focus whether the China stimulus is failing. If it's failing, then could be this is our main candidate, which is triggering the slowdown. And the other one which is concerning, as I've already told you, that the interest rates. And the interest rates have once again started moving higher. That's another major concern. I don't think the market is out of the woods yet. This is significant comeback on the interest rates. They were went below 4%, the 30-year, now they're up 4%, well above. 4%. I told that market was overpricing the rate cut, but I think this adjustment is way more than that were required for rate cuts. So with this war there, China stimulus market is once again the inflation worry has come up, and that has, I think, triggered a push towards the interest rates. Now, in the weekly chart, if you look at the long-term interest rate, we have seen a crossover and a buy signal. Though it's a low probability at the moment, but we can see some significant comeback towards 4.55. If it does, the pressure on the companies will be going up as their cost of refinancing will be going up. So the debt crisis or debt default like risk is going up with this interest rates going up. And this interest rates going up is going to push the US dollar on the higher side. Sorry. In this three macro background, now I want to see how the equity market is faring, like different equity market. First, I'm going to take a look at Asia. Okay. First in Asia, I'm going to start with Oceania, that is Australian market, and I'm going to look at through the daily chart. Daily chart is good, short-term swing, short-term, mid-term swing, rather short-term we can't say. With the background being yellow, we have a full green candle. The selling pressure has abated, but with the background yellow, this is not a great time to go bull yet. The momentum remains bearish. Australia not so hot right now. Now we are looking at New Zealand. New Zealand tried to make a momentum comeback, but looks like the momentum right now is gradually fading from New Zealand. So the latest comeback with this buy signal is not getting enough push on the upside. It may get in future if it can make 12,500 as its base. But on the risk side, it can actually break lower also. There is a lot of slanting area from where price can escape and drop big. Lower side support is there, 176, 180 area. Next, I'm looking at Japan. Japan is a very important economy, which is only advanced economy in Asia, but its stock market is struggling. Focus with remaining on the China. Japan remains on the behind case, the less focused. We are not getting much of movement right now in Japan. Once Japan starts moving up, this is an important area that Japanese index is testing. I expect further likely that there will be breaks, and once it breaks, I expect some good run from Japan Nikkei. But until that time comes, I'll prefer to wait for the right moment to go long on Nikkei. Current moment, I personally think is not right. However, आपको किसी का सुन के ट्रेड नहीं करना चाहिए. You should not listen to anyone and then trade. That's what I always say. South Korea, not at all good. China has been superb move because of the stimulus, but today's move has been big. The Alibaba stock that I'm holding likely to see some down move, but I'll have to see what I'll be responding to it. Largely, I'll not be reacting based out of panic. I'll be seeing what Alibaba is doing whole day. If today is a more of a comeback day on the global market, then Alibaba on the evening may not suffer that much. But that decision will have to keep once the market opens up in New York Stock Exchange in the evening. So this is China, and this is, we'll see, this is Hong Kong. It has suffered similar kind of fate. And ye आना ही था. At some point, it was supposed to come. The move had been one-sided, very aggressive. So now we are in the right moment. Now the next move is important. Will it be up? Then China is coming back. That's the confirmation. Will it be moving down? Then we are China. Trouble is not over. China will once again come back to the focus. Singapore, we are taking a look at, not great, momentum fading. Likely, we are likely to see a major decline further in Singapore with the sell signal. Right now, Singapore is not a great place where you'd like to remain invested. Our market, Indian market, has made a comeback. Not a surprise. We saw in morning video of mine that there were green socks. There was clear telling market is coming back. and it was daily chart also, some important empty line is over there. So comeback is very, very natural. However, market remains makes this comeback does not change the fact that still we are in the bearish grip, and more of our buy support sell resistance is happening with the mixed market. No side is strong enough, but I think further as after this correction, once again we can see downside push, and once it does, this time it can be even more on the aggressive side. I'm not even convinced that we should move into buy position yet. Though it today has been a strong comeback, let's look at the 125 minutes chart for very short term swing frame. What's it telling? It's showing a comeback, and we have a strong resistance area 23,947 in case of Nifty 500. But we can look, we can take a look at the Nifty 50. Just a moment, please. There is a mistake coming up. Sorry for that interruption, had a call. So this is Sensex, and let me click Nifty. So we'll be able to see Nifty as well. Nifty 125 minutes, just a momentum comeback. It's not even a, I'm not ready to push forward. See, I'm not ready to go bull yet. I want a specific buy signal, and then also I'll see further how the chart pattern is forming, then only I'll think of it. Currently, there is no reason to buy for me as per 125 or as per daily chart. It was what was today. Today was an exit signal from the short trade that began on the day of 30th September. Today we are getting a recovery from that short. It has been very serious one-sided move. Now, while Asia has been a mixed picture today, Europe has not been that great a picture. Europe remains weak, and I actually remain short on Europe because Chinese comeback, I think fundamentally could be short for European manufacturers as China is becoming better and better in replacing European manufacturing goods. So this is sell signal in Spain, not a strong one. I have been long on Spain more. Spain has been the most bullish, but some other indices which are not that strong, they are seeing much stronger bearish pressure like France CAC 40, but I expect it to remain in range, nothing much. UK 100, once again, London FTSE is not working. This one is likely to remain in the bearish range. So overall, with the EPV is an exchange traded fund. With the EPV, I'm actually bullish on EPV and short on Europe. So when Europe goes down, then overall Europe goes down, then this ETF price goes up. So broadly, Europe is not looking great. I'll take a quick look at the European 600 index, which is one of the very broad index. It is also showing bearish pressure. So European stocks will be very careful of. Some of the Asian are coming back, but stocks are right now not so healthy. I remain long on volatility overall. Since last Friday, since this day, about 27th of September. So this time onwards, I have been long on volatility. Volatility has gone significantly up overall. And this looks quite a solid move. And from here, as the volatility has gone up, the risk in the market has also significantly gone up. So VIX, I remain overall a bullish until I get a major spike. I did not yet to get any major spike. This is a minor spike for the day. The major spike has to be on the same day of the rise. So this is not, it looks like the VIX will have further rise in the upcoming days and weeks. So with the volatility rising, current time is not a great time to do investment long on equities. We have to know when not to trade in the market much. So this is S&P 500 E-mini futures. I've done some marginal long position, short position to start with. I've shorted S&P and I've shorted Dow, but I have not shorted Nasdaq yet. So, and it is yet to go big. It is just a beginning short, as I can see, a sell signal, but a low probability. That's why the smaller position. Nasdaq is yet to give me that confidence chart wise that yes, it is a good risk reward opportunity to have a start with. So overall, I remain bullish, bearish on various indices, especially Nasdaq is creating the first full red good candle today. So today at correction, I might see with this will be my stop loss around 20,150. Uh, and I'll remain first with lower quantity. Once the background turns red, then I'll become aggressive as well. Currently, I'll remain a little less on the aggressive side. We are just starting off with the trade. But मेरा सुन के कभी ट्रेड मत कीजिएगा, खुद देखिए, खुद जानिए, then ट्रेड कीजिए. So overall मुझे इक्विटीज का पिक्चर did not healthy नहीं लगा. Emerging markets suffered big today, as you can see from the index. That's because of China. And overall, the global market, the SPGM ETF, which shows the global market, they are also with background yellow. Not a great time to do equity investment on the long side. You have to be strategically remain in the market. I hope my asset allocation video is helping you regarding that. If it's my video, this video helps. अगर ऐसा हो रहा है, don't forget to keep a thumbs up. All the best from my side. And as always, happy trading.